everyone, it's Fiona from Nadaya Financial and it's Mortgage Monday. Today I'm going to talk about pre-approvals and are they really a sure thing? So the first thing you want to do, you're a first home buyer or you're simply looking to upgrade your existing property. So you're saving your money or you're getting your equity together. The next thing you need to do, as I've mentioned previously, is rein in your spending. Your living expenses are something that are highly scrutinised from the bank. So for the few months previous to applying for a loan, rein in that spending. And lastly, find yourself a good broker to help you find the most suitable loan for your particular needs. So what is a pre-approval? Well, a pre-approval is a pre-assessment from the bank stating how much you can actually purchase for and that you're good for it, basically. Now, a pre-approval can last between 1 and 3 months, and sometimes it can be extended. When it does go beyond 3 months, they may just ask you for a few documents updated. For example, a current payslip to show that you're still working and that you can still afford to service that loan. Now, what's changed with pre-approvals? So the banks have realised over time that the amount of pre-approval applications is actually quite high compared to the amount of pre-approvals that actually come to fruition. So a very small portion of pre-approvals go to a formally approved. So what the banks have decided to do to save manpower and to save time, they're conditionally pre-approving the applications without fully assessing them, which means they're approved conditionally, of course, based on the information that you've put in, based on the numbers, based on the information that you've provided to your broker. So it's really important to make sure that you haven't missed anything and missed providing any sort of information or any conditions on your job or anything upfront in those numbers, so that it gives you a stronger indication that you're okay for your pre-approval. Now, your broker will know whether or not the bank that you choose to go with does fully assess pre-approvals, but most of the time they don't. So if you find a bank that you love and you want to go with them and they don't fully assess them, well, you're just going to have to go with the flow and accept it and hope that the information that you've provided and all the numbers are accurate enough to go to full approval. And the full approval actually comes through when you've submitted your signed contract of sale and, of course, give them the valuation, and that's when it goes to, well, hopefully it goes to formal approval. So there's those things you need to consider with a pre-approval. First of all, a pre-approval is the bank saying that you're good to purchase for a certain amount of money. Second of all, they're not fully assessed like they used to be. So just make sure all the information that you provide up front is accurate, basically. And thirdly, your broker should know which banks fully assess pre-approvals and which don't, just so that you're ready at assessment time to make sure everything's good to go. So if you'd like any further information on anything I've provided, any information I've provided today, feel free to leave a message below. Have a great day.